What is happening, everybody? It's your boys, Sean McLaughlin, Steve Straza. This is the Flow Show. Happy Wednesday. How you doing?
Doing good, man. How are you?
Good. We usually do this on Tuesdays, but we had to pull an audible because this guy got the craziest 24-hour bout of food poisoning I've ever experienced. It was insane.
What did you eat?
We got some takeout barbecue from the local joint here in town. I think it was the sausage that was not quite right because, man, I'm the only one who ate that. So I think that's why it was the sausage. But, man, I was throwing up all night. It was gross.
Lasted the whole day?
The whole day, I started to feel crappy at about midnight, and then I didn't feel back to normal or close to normal until bedtime the next day. So it was basically 24 hours of just, man, I was not myself, man. It was worse than COVID. I had COVID, a year ago. It was way worse than COVID.
Stay away from that barbecue.
Oh
Don't
man,
go there.
man, I mean, okay. Well, look, people don't want to hear about my health diagnosis. They're here to get something actionable. And I wanted to start off. I know you got a lot of option flow stuff to talk about, but related to all that, let's just kind of do a high level look here. If we bring up the my chart here, I got VIX showing here. I've got a 1 year chart of VIX, and VIX is threatening to break down below 18, which is a level that, man, we it's once we've gotten there, we've had some big spikes soon after. I'm not saying that's going to happen again, but if you look at like back in January of last year, when we were just below 18, or I guess what's that, 19, we had a big spike. We came back down again in August, and then had a big rally, and then even recently, this was the SV Silicon Valley Bank debacle and all the regional banks. That's what we had a little spike here. I'm not saying that just because we're at 18, it means something bad is going to happen, but it seems like where we're at now in VIX is about as low as we're going to go.
Yep.
And the path of least resistance for VIX eventually will be higher. So that kind of raises my spidey senses a little bit. I know that we've talked a little bit about the S&P 500 kind of bumping up against some resistance. So it would all kind of add up that we might be in for some downside action. Maybe. Straza, what do you think?
And that resistance that's bumping up against is the same place the index was last time the VIX was here, right? So back in February, we kind of peaked out at this level that we're testing now in the S&P 500. Back there, VIX is back at the same level. You're saying we bounced, sellers come in, reject prices again at this very logical level of overhead supply.
Well, you know what's interesting also is that for the longest time, for years and years and years, people who follow VIX, which I do, I don't trade VIX options, but VIX is something I pay attention to. For years and years and years, 20 was kind of like the upper level. Like when
Right.
stuff would get dicey, when things would get risky, VIX would spike up to about 20, and that was the high level. I mean, of course, we would spike higher in like really crazy stuff, but generally speaking, 20 VIX was considered high, and like a 12 VIX was considered low. So you always wanted to pay attention to where you were in that range to get a general sense of the market temperature. But man, over the last, I don't know, call it 2 years or maybe since COVID, I don't know, but 20 seems to be the new low in VIX, and 30 is the high. If we're closer to 20, then things are kind of normal and okay, everything's fine. It's when things start to get weird, we move up towards 30 and beyond. So I don't know. I don't know if that means anything, but it's an interesting observation I've had about VIX.
It's amazing too that the VIX just didn't even get above 30 on all the bank blowups last month.
Yeah, intraday it printed above 30 very briefly, very briefly. And
So
I don't know if we've talked about this on the Flow Show before, but I remember I tweeted on that very day that I have the Trader's Almanac by Brent Donnelly, and the entry for that day, and of course this book is printed a year in advance, like he printed it in the prior year to publish it. Uh, the entry for that day, for this exact day when VIX hit its high, the entry was, today is the day where VIX typically, seasonality, prints its high of, for like the next 6 months or something like that. And I tweeted that out, and man, did he. That's pretty amazing. I think that's pretty amazing.
seasonality, it's a thing. We pay attention to it. I got some chart porn for you.
Ooh, I like this. Sounds sexy.
We also pay a lot of attention to positioning. right? It's really what we're talking about on this show is what is the smart money or really the big money doing in the options market. Well, this chart here shows you large speculators positioning in S&P 500 futures. These are ultimately your hedge funds, right? Um, we don't even include the S&P 500 futures in our COT heat map that we do every Friday where we do all the commodity futures positioning
Yep.
because really the logic there for that is it's not the full picture, right? If I'm looking at cocoa futures or cotton futures, the futures market positioning is pretty much all the positioning, right, for that market. We have a obviously very large equity market for stocks, so it's not in there. But when I look at this chart, Sean, I am like, this is very compelling. Maybe we have to add it. Maybe we got to add it.
So if I'm reading this correctly, it looks like we've got the largest net short position in S&P futures since 2012 or 2011.
2011, yeah, late 11.
And
So
if my memory serves me correct, in 2011 was that the taper tantrum that was going on when
it,
in Congress?
and it was the double dip. Remember double dip recession, double dip recession. We're gonna go test the lows. We're gonna crash again. So yeah, you had some volatility there, and like we've circled the spots on the chart that coincide. The price levels that coincide with these extreme bearish positioning by the large speculators, and tends to be a good time to buy stocks. Sure, it could go lower. It's not the end all be all. The way I would explain a chart like this is it's simply a piece of the puzzle. Price has to confirm, but it's not bearish. It's not bearish at all. And it's what we've continued to see. People hate this rally. We keep climbing some, wall of worry. The IMF came out yesterday, said we're going to have the lowest global growth rate since 1990. Market doesn't seem to give a shit. Just keeps marching on high. We got earnings coming up. Banks are blowing up. Stocks look fine.
Well, it was in the chart report yesterday. There was a quote from Jimmy Rogers in there. I'm paraphrasing, but he basically said, "When everyone's on one side of the boat, you should go to the other," and that feels right. Looking at this chart right here,
So I just thought it was interesting. I thought we'd talk about it. We can talk
that is interesting. And you know what? I just want to add some color to that real quick because oftentimes fading sentiment is a good move, right? Especially at negative extremes. Fading sentiment has often been a good move. However, we're looking at large speculators. These are hedge funds, people who quote unquote are the smart money. Um, is the smart money being dumb here? I mean, that's
in this
I don't have
case,
an answer. It's just an interesting question.
well, it's in this case the smart money, or I'm sorry, the hedge fund money is the dumb money. They are the speculators when it comes to S&P 500 futures.
Well, let's not write them off yet, Straza. Let's give it a few weeks. Let's see. I mean, if the market rolls over here, then maybe we'll come back and say, oh, they were right. But history serves, at least judging by this chart that you're showing, history serves shows us that it's often a good time to buy at times like this.
To the options.
Let's do some options. What do you got, man? What have you seen in some unusual options activity? I'm going to guess, without even looking at your chart yet, I'm going to guess that most of the stuff is bullish.
All bullish except for Delta Airlines. These airlines just can't catch a break. What a terrible industry. And EWU, which I'm not shorting that thing. Europe looks so good. These European country indexes are all just screaming to new highs today. They all look great. There it is. You got the chart right there.
Yeah.
If you don't think there's enough opportunities in U.S. equity markets, I'll send you over some international ETFs. You get some exposure to Europe then, because things do look a lot better overseas these days.
Well, I love it. JC says this a lot. He says when European markets are making new highs, that's not bearish. That's
not
people looking for risk.
Off. It's not risk off, right? It's not like the yen and gold and bonds and staples making new highs. No. It's more like the homies and semis making new highs when Europe's making new highs.
Right.
What stood out though this week? We did a biofarm, Bridge Bio, BBIO. I don't know what you're going to find. That's why I wanted to talk about this one. We're in the common. We put a trade on this one above 18. It hasn't triggered yet, so still time. It's a nice base. We have a huge gap that could potentially be filled, but I don't think this one's going to have a very super liquid options market. I think it's like a $4 billion cap.
Well, you might be surprised, Straza. There appears to be enough participation here in the options. Like I don't know how easy it is for you to see my screen, but I'm looking at May options right now.
Yeah.
The nearest or the at the money calls are trading at $22 bid, 250 offered. That's a little wide, but the next strike out, they're trading $1.35 by $1.50. That's not crazy. There's some good open interest there. The June options doesn't seem to be a whole lot of open interest. They may have just been recently listed. But then if you go out to July, there's a lot of open interest here.
Yeah.
And the difference between the bid and the ask is not unreasonable. I think this is something you could trade in options.
So options traders are going all the way out to July with some pretty sizable open interest in some of those. How far out of the money is that with the 12,000 open interest, if my eyes are right?
That's the 20 strike.
20 strike. So that's what they were in. That popped up on our scan a lot closer term.
Which, by the way, very interestingly, I'm noticing something that looks weird to me here. And I don't know if I'm misreading it, but I highlighted this July 20 call strike.
Yeah.
Notice right here, this 43.
Yeah.
That's the delta.
Oh, I thought that was the trade price.
That's according to Thinkorswim, the platform I'm using here. They're showing that this strike has a 43 delta. That's a strike that is currently 33% above current prices, or about 30% above current prices, trading at a near at the money delta. That is very interesting. Somebody knows something, I think.
So why is that an at the money delta? Teach us about Greeks.
Okay, good question. So generally speaking, all else being equal, an at the money call or an at the money put will have a 50 delta. What that means is for every $1 move in the underlying, the option will change approximately 50 cents in value for each dollar move. So if it's a call, it's an at the money call, and the underlying goes up $1, that call will increase in value by 50 cents. You know, all else being equal, which nothing else is ever equal in options market. I think it's funny when people say that, but at least the delta component of it.
Instead, you're getting that delta when you're out of the money by 4 or 5.
Right. I mean, this is like I said, this is a strike that's currently 30% above. I mean, this thing's trading at 1540 right here. This is an intraday chart of BBIO. It's trading at 1540. So this 20 strike has according to my platform, maybe my platform's wrong, but I don't think so. It's pricing in a 43 delta. So that tells me that, I don't know, the options market sees something. Maybe, you know, I mean, look, we did trade up to 20 not too long ago. So
that's the breakout level too. Would you, if you were going to do something like this, 2 questions. Do you wait for the resolution? Those options are going to be moving by then. If you don't wait and you wanted to put it on something like this now, how do you craft this strategy? Do you just do long calls?
You know, I think that this strategy shapes up to be potentially a nice calendar spread situation.
Talk to me.
And I know we've talked about calendar spreads a little bit more lately, which is interesting.
It's the same formation that we tend to always talk about.
Yeah. You know, maybe what we do here is, let's see what the 20 strike is in August. So interestingly, the August strike, I mean, so I guess it's only 1 month later, but it's not that big of a difference in price. It's bid 210 in August and bid 190 in July. So maybe what you do here is you put a calendar spread on, and it probably take a little while for it to work because July options have 3 months until expiration. But you're betting on, you know, these options here, these July 20 options being, you know, pretty, I hate to use the term overpriced, but you know, it's a lot of premium there relative to 1 month later. I mean, if I put the spread on right now, I mean, this is only going to cost us like what, 25 cents? Let's see here. Cost us 30 cents to put that spread on. And so the bet that we're making is that those July 20 calls are going to decay in value a lot faster than the August calls. It's just going to take a while. That sounds contradictory. I feel like I'm contradicting myself.
Hopefully you get that resolution after July, between July and August.
Well, I mean, here's the risk, and this is the risk that doesn't happen often in calendar spreads, I don't think. But if we were to put this calendar spread on where we're short the July 20s and we're long the August 20s, and if BBIO makes a run back to 20 quickly,
Hmm.
We actually might not make any money on that trade or make very little. Um,
Yep.
and considering that it was there not too long ago, and this thing looks like there's something percolating under the hood here.
You
This trade,
might you might regret in a situation like this not just going long calls.
yeah.
Yeah,
Well, I
things
guess the good news here is that if you do put a calendar spread on, you pay 30 cents for it. That's your risk. That's the most you could lose.
right, right. So then why not?
Yeah.
The volatile
I just
stock, it's been jumping around a lot since that post earnings gap from like a quarter ago.
Yeah. I'm puzzled by that huge delta in those July calls. Yeah.
I could
Interesting to
just
know.
interrupt quick public service announcement. We're doing a new thing here. We have a new YouTube channel, Stock Market TV. So I am monitoring the live chat. So if you guys are watching along live with us, you have questions, drop them in there and we'll try and get to them. Sean and I will just address your questions live here.
Ooh, I can't see those questions.
Cool new feature. Well, I figured you're more boomer status than me. Not that I'm great, but I'm flipping back and forth between all these tabs. I'm trying not to flip it up.
Are you calling me a boomer, Straza?
Not at all. Not at
I
all.
am Gen X and proud of it.
You didn't know that you couldn't be on your PC for Twitter Spaces. You're not a boomer at all. All right, I got another. You ready?
All right, let's see it.
Wait for the bio. Good conversation about it. Hey, gold is hot. People like gold again. Have you heard?
I've heard. I've been hearing it from you guys.
All right. So, not my favorite vehicle, right? I just, right off the bat, got to say, this has been a laggard. I don't love the chart, but it is, nevertheless, a vehicle and a very liquid vehicle. And that's probably why you saw the options activity in this name. This is Barrick Gold, one of the biggest miners, one of the largest components of GDX, probably right behind Newmont. So, GOLD, what were they trading?
1968.
Calls on the offer. They were hitting, wow, the weekly strikes. 19.
22 calls?
They were in the 19s.
Oh, okay. 19s.
Yeah.
Why, just this is like a neophyte question here. Why would you trade something like GOLD versus a gold ETF like GLD or GDXJ?
I wouldn't. Frankly, I would not. I make this point often, I think, but when it comes to these commodity stocks, there's a lot of like individual company or company specific risk, right? Where they're in these highly capital intensive businesses. They're going through mergers and acquisitions. They're buying other miners. They're building out new mines, right? And you don't want to buy the miner that messes up any of those things, right? They're not just selling software and everybody's selling software and everybody's buying software. Like very different. You can blow it by trying to get too cute here and pick the right ones. I love the commodity ETFs more than any other ETFs. For that reason, it really saves you from that. The uranium ETF is another great example. I don't want to pick which uranium stock is not going to get sued by the government next. I just want to buy the whole basket.
Right. All right. So with that disclaimer out of the way, and we've seen aggressive call buying in gold, is that driving us to maybe wanting to put a trade on in one of the gold ETFs because there's something going on underneath the scenes here or behind the scenes?
Let's talk about GDX then. Throw gold out. It's a laggard. We got GDX and GDXJ. I mean, maybe you do the juniors, get some more juice here. We do have levels kind of coming into play. They took out their pivot highs here. I almost feel like we're chasing a bit on this trade right now.
The GDXJ, one thing that we have to pay attention to is that the options volume or options volatility is a little bit elevated, not unreasonable if we wanted to play it with just straight calls. But you know what? What I'm thinking here is, first of all, I mean, do you think this is like if this thing moves, this is a trend that could probably move through the summer, right? Would you say that? So if we look into October options, let me just look at the chart here real quick. I'm wondering if we're getting any juice at 35, the 35 puts. Ooh, we are. Look at that. In the 35 puts, you could sell them for about $1.80, $1.85. Maybe this is a candidate for a risky reversal, the old risk reversal trade, where you sell the puts and you take that proceeds and buy the calls. Although actually, those out of the money calls are priced higher than out of the money puts.
So what if on a risk reversal we had some corrective action here before the move started, though?
That I think that would be the move because look at this. If you go like equally distant away,
Mhm.
let's see, we're trading at like what 42. So the 35 puts are trading at $1.77 bid.
Yeah.
The 50 calls, no, let's do the 49 calls, which is $7 higher, are trading $3 bid, almost twice as much as the puts that are an equal distance away. So maybe not a good candidate for a risk reversal.
So that's telling you that options markets are pricing in a up move, not a down move for
Yep.
gold.
So you know what this tells me, Straza? If you want to play this, I think just the old trusty bull call spread is the way to go because we're getting so much money on these out of the money calls. We could buy we could buy say the 43 calls and sell the 50s against it, and that'll only cost us well no, let's do some even round numbers. Let's do like a 45. If we bought the 45 calls and sold the 50 calls, it would only cost us $1.62 to get in. And we have until October for that move to happen to get to 50, which does not seem like that would be that big of a stretch at all when I'm looking at this chart.
Nope, it's already moved that much this year.
Yeah.
All right, before we're done here, can you check SIL and throw the chart up too? I'd like this one on a tactical basis more than any of the minor ETFs. It's really clean here. You got those pivot highs, but I don't know how optionable it is. So this is the silver miners. Me and Sean were looking at the junior gold miners because you'll get more juice there than the gold producers, which is GDX. You're going to get even more juice from the silver miners than probably either of those.
Yeah. So I'm looking through it right now. I just looked at May and I'm looking at July. These do look tradable. The bid-ask spreads are pretty, pretty tight.
So YOLO calls. I want to be in the 33s with everybody else.
33s, how much time you want? You could do July or October.
July.
So the July 33s are, you can get them for about, let's say 240.
All right. 10%. Not even. What are we trading at today?
We're trading at $32.
Oh, gosh. Then we're there.
Yeah. So all you need is this thing to trade up to like 36 to break even, but you got till October for that to happen.
Yep.
I like that. I do like that, Straza.
And that's just over 10% move. I mean, these things move 10% in a day. These ETFs on a big day. Not all.
Look at that. We found a shiny trade in metals.
All right. I think our work here is done, Sean.
All right, folks. See, this is how we do things here. I mean, you're basically getting a glimpse into what our analyst meetings look like here at All Star Charts. We throw stuff up on the wall. We dig under the hood at the charts. We look at the options chains, and we put our heads together and we come up with trades. So that's how it's done. Sometimes it's not pretty. Sometimes it is. This time it was a little messy, but we got there. I like this SIL chart. I like this trade. July 33 calls. I might get involved here, Straza.
We should just start airing the analyst meetings. Some of them just like live on the weekends.
I feel like we should.
Saturday mornings with the all-star analyst squad. I like that.
There you go.
So what do you think? All right. We'll figure it out.
We've talked about it in the past. I think we should do it. All right, let's go. We got other things to do. It's been a good day. Good chatting with you, Straza. As always, thanks for the good ideas. Everybody, this has been The Flow Show. He's Steve Straza. I'm Sean McLaughlin. We'll talk to you again next time. Take care.
Later.